Okay team, it's Apex Trades here. I do hope you are well. Let me know if that music's too loud or anything. If you want me to turn it down, it's absolutely no problem. But let's get started. So look, bit of a recap. This is the third session in the Traders Workshop, and the idea is that we want to try to get incrementally more expansive with our ideas as we kind of move through the, let's say, the beginner to more of a, I guess, more experienced trader is probably a better way to put it. But we're going to just start by reviewing kind of where we went over the first one. So very quickly, the first one, we focused, if you remember, on our volume zones. We wanted to understand a little bit about where the main zones lie, and if you remember, we done these based upon something called visible range volume profile. It's where we pulled out the information that shows where the biggest areas of trading occur on a chart, and then you use that data in order to be able to I guess give you points in the chart where we tend to get sticky, or we tend to get, sticky is probably the best word. We tend to hover around and consolidate in these zones. Like you can see here quite clearly that this zone specifically, I'm just going to lower that a little tiny bit. This zone specifically was quite sticky. You can see we get sticky around here. This is the point of control, the red area, and again a lot of consolidation around here. And what that typically means is a build up of liquidity. And the longer we spend in these areas, it usually signifies a bigger move. Like, you can see this area here. We spent a lot of time at this zone here. Now, this is only a small part of the chart, by the way. This only goes back to like June or even like September. But actually, this point of control, this red line, I think it's like 19,200. It's the biggest area across the entire Bitcoin price range where we spent the majority of time. So that was the first session we covered, the importance of that kind of volume zones. And then the other thing we covered, as well as that on the second session, was your key high term time frames. So understanding where the key levels where we reverse. So if I go to the monthly as an example, you can see, if I just zoom, if I just zoom in here, just get rid of that, you can see these are the points on the chart where we reversed. So we had a monthly candle that come up here and closed, and then we go down. So theoretically, you would say, well, actually, why haven't we added another month here? Well, you can. You just put my magnet tool on. You put a month here because you can see we had two red candles, so we haven't had a reversal of change. But this candle promotes itself with a green candle in that month, which was the month of October. So we would call this a monthly key high term time frame, and it's usually where we get a lot of respect on price action, throughout the month of the candle. And then just lastly, we'll put one at the bottom for good measure, and I'll template that as monthly. Now, by the way, listen, I'm going to do my analysis, let's just say this, the resistance and support lines on BTC. But if you guys want me to look at a different a different instrument, ETH or whatever, just let me know, and I don't mind changing. But unless you guys tell me differently, I will apply this on ETH, on Bitcoin. And then we've done the weekly time frames, which again, these are all about adding more areas on the chart which get respect, and whether that's because of liquidity gets built up and then it reverses back, or other reasons, it's basically where you tend to get some good stickiness in the chart and a reversal. So what was this one? That was the monthlies. We're just going to pop that in there and then put the final one in there. Okay, we've done the weekly ones. So the weekly, we're just going to get rid of the monthlies just to get rid of that. The weekly ones, again, that's just on, you go down to the weekly time frame, and then you plot anywhere where you get a change of direction with a candle. I haven't bothered going down this low on the weeklies, but again, oftentimes you'll see these get hugely respected. And then finally, we picked the daily candles, and the reason we pick weekly, monthly and daily is simply because those levels, it's significant. If you take the whole traded range across a week or a day or a month, the point at which it reverses, psychologically, it's key, it's significant, because it's a whole day's traded range, and therefore it's reversed at a specific point. And so we want to know what that point is, because the next time it hits that point, whether it's to the top or the bottom of that reversal, it's going to have significance, whether it's some sort of, you know, demand zone, supply zone, some sort of an order block. These are key components, and we're going to cover these in future lessons, but this one, just to understand, even if you don't have the understanding of exactly why at this stage, just know that when we map these key high-term time frames, they are usually strong points of reversals when we hit them. And then the first lesson we covered was just the basics of TradingView, wasn't it? We kind of went over how to use TradingView, how to navigate the panes, how to use your object tree to make sure you're trading like a boss and not an idiot, and you don't get a chart that looks like spaghetti soup. So that's kind of where we are. So now we want to talk a little bit about support and resistance, but we want to do this with a bit of a twist, right? Because for me and my own trading journey, let's just say, I've gone less favourable towards things like support and resistance as, you know, the best way to trade. I think the majority of people who come into the industry and learn how to trade, whether you're retail, institutional, whatever you are as a trader, you tend to figure out that the first thing you learn is support and resistance, and it's not a bad thing to learn, because you need to know where these things are. But to trade them, in my humble opinion, is not the best way or approach. But still, I think they're fundamental to understanding where these are. And honestly, I don't think they need to be complex. They just need to be. You need to have a keen eye, and everything is very much subjective. And I'll just say that because depending on the type of trades you are, will probably determine how you react to certain things. So let's just go through it, right? So look, the first thing I'm going to do is I'm going to use my eye and nothing more to just map out some ideas in terms of where I think, me personally, and this is subjective, where I would start drawing support and resistance, right? So first and foremost, the important thing for me is it's all about data points, right? And I'm going to use the term data points in the sense of each time a candle or a wick touches a point, I will class that as a data point, right? So, and there's a reason why I'm going to show you this, but if we zoom into this area here, you know, what I'm looking for is, so this would be the first part, and just the kind of eye draws you to this pattern here, doesn't it? Quite naturally, you're drawn to this pattern. So you go, okay, well, I'm looking for multiple touch points, and you would call it, I would guess, if you've got 3 data points or more, then you start to see patterns. Yeah, so like, let's look. Here's data point number 1, the very first start of it, okay? Here's data point number 2, data point number 3, 4. We'll come back to this in a second, and we'll come back to that in a second. Data point 5, 6, 7. So, without probably too much conjecture, you'd look at that and go, okay, well, that's a reasonable pattern to draw because your eye is drawn to it, and therefore it kind of has that feeling of, you know, a trend line. And then we go again. So we're starting with this point, and we're just joining the dots. Yeah, so we're joining this dot and this dot, and we're going to go up again. And we're looking again. Remember, we're just looking at the chart for data points, right? Data point 1 there, we've got a data point there, we've got a data point here. Again, forget about this for a second. We have a nice touch there. And remember, why do we draw these patterns in these charts? It's because more often than not, there's 2 types of traders. Well, actually, it's not more often than not. It's just binary. There's 2 types of traders. There's those who go with the trend and those who try to go against the trend. Me personally, I go against the trend. I reverse trade. But there are people who go to the breakout trades. So, you know, think of it like this. If you're a reverse trend trader, what you're looking to do is, when it hits this point, and realistically, you don't know, by the way, that this is a trend until your 3rd point. Because let's face it, here's data point number 1, here's data point number 2. You can draw a line between these 2 points, yeah, quite clearly. But you need to see data point number 3 in order to validate that actually, wow, okay, this does look like it is a trend. There's the problem. Here's data point number 4, right? So look, maybe you're thinking to yourself, after data point number 1 and data point 2, you're going to draw your trend. But remember, you know, if we take the replay down to here, right? At this stage, we've only got 2 data points. So you've drew a trend. and you've gone, okay, let's see this play out. But you've also got a couple of data points here. We'll call this a little slight wick of a liquidity grab, let's just say. So let's move it forward. We'll do 10x speed and hit play. Okay, so now we've got a third data point. So now we're absolutely cooking on gas, because we're thinking, okay, we can now fundamentally get ourselves into a position where we are in a trended range, and therefore we know where the top of the range is because we've had a number of touch points, and we know where the bottom of the range is because we've had a number of bottom touch points. So it would be absolutely no problem for you to go, right, I'm going to put a long entry at this bottom of this range. And this is exactly what a lot of people do, isn't it? I'm not kind of saying it's a bad thing, but just be mindful of something one quick second. So when the price comes down to here now, and we'll just slow it down a little bit, you're going to have your order here. And if you're greedy, like most people, you don't know when to take profit. So you might go 50x leverage. If you're trying to get in and out, you might go 75x leverage. You may even go 100x leverage, which if you're doing that, you know, your stop losses are going to be either here, and more worse, your liquidation levels are going to be here. So, you know, you're going to try to put an order in, and this is what will happen. Oh, you tit. Sorry guys, let me just get that back again. My bad. Yeah. Ooh. Get back to where we were. Right. Yeah, so you're gonna, let me just get back on that range. You're gonna see what I'm gonna do anyway. But the reason I'm going and showing you all of this is because what I'm gonna show you is how, yeah, a lot of people will trade and ways to navigate these kind of ideas, because this is the important thing. It's good that we're learning how to trade and we're learning the basics, but equally we also want to learn some cool stuff that gives you an insight into how to, yeah, bypass some of the early mistakes that a lot of people will make. So again, yeah, good narrative. We've had a number of touch points, and now, you know, price is coming down, and we want to see, you're going to put your order here as you would do, and again, we just, you know, we hit. We don't just hit, we smash through, and, you know, you're wrecked, aren't you? You liquidated, you stopped, whatever it would be. It's typically what will happen more often than not. So, invalidated trade. But here's the key thing. Where does it go? Nowhere. It didn't even break the liquidity down here. Moreover, it didn't break the liquidity down here. All it done was to stop everyone who was trading in this range. And this is called inducement. And what this essentially means, and how the markets get manipulated, is we as people, we naturally gravitate towards these zones and these supply, or let's say support and resistance. So this would be a support level, which you would normally do. So okay, forget about it, right? We've dusted ourselves off now. We've thought, okay, first loss in, it hurts, but we'll get on with it anyway. So we crack on, and we're thinking, right, okay, I'll get back in or whatever, and we go 10x, and then we're going to look to short to the top. Okay, so we're riding the range up, bang, same happens again up here. The problem is, again, it's the construction of what we do. We look at data points and we map these out, but this is exactly what support and resistance is, right? You are looking for line of best fit and trying to map out, you know, multiple data points. So I'm going to take the replay off. I don't think we need it. Finish that off, and we'll continue. You know, so again, all I'm trying to do is just look at creating, you know, lines of best fit. Now, realistically, right now, we can map these out. Like right here, you can see a nice level, right, where it's been respected quite a few times, right? So this would be a horizontal support line. So again, we're looking at data points. So here's one. Okay, we've had a couple of wicks here, a little wick here. We've had another touch point here, you know, liquidity grab. But in general, right, this area's been well respected and upheld for a lot of time. You can see how many times, you know, the bears have tried to break through right the way from, you know, from September around that 18k. It's really provided a solid line. So you'd be forgiven for thinking enough times that, you know what, this is a good place to long from. But again, it's difficult. It's always easy in hindsight to figure these things out, because right now, you know, by this point, you know, are you starting to draw a horizontal line? Not really, because you need more data points. So that's that one. And then the top one we'll go, that's looking like another kind of range. So this you would say is a nice range which is trading between now, and it's like support at the bottom, resistance at the top. You're counting your touch points. You know, more than two give you effectively a reason to suggest that this is a probable reason to utilize these as support and resistance lines. And then we can go, okay, well let's start moving into more recent time frames. So let's look more at what we've got now. So how would we start mapping out support and resistance here? Well, I would say, to my eye anyway, you know, I can see a kind of a line that just intersects right the way through from this lower point here, right the way through. So let's draw that properly. Again, data points, so I'm looking for, I'll figure it out, but maybe it's here. And then we'll tidy it up a little bit. Let's say, I'd say probably that feels about right. And again, this is all subjective, so no one can really say, yeah, this isn't really how you do support and resistance. It's your interpretation of how it should be drawn versus someone else's. So, you know, this would be an interesting kind of diagonal ascendant support line. So again, you're looking at ways in which you want to again look for longs when it comes down to the bottom, and look for shorts when it comes down to the top. What else would we say? So you'd say another one would be, you know, kind of along here, and you've got another one here. Might be a little bit messy, I probably wouldn't go that far, but that's one there where you've seen a number of these touch points. But again, inducement smashes through, comes back up, and then got another kind of range about there. Right, now zones, these are just lines. It's never lines, it's normally zones, right? It's like an areas where you wouldn't just draw it as a line. It's normally a zone. But here's how I approach things a bit differently, at least in terms of, you know, if let's zoom in now. What are we on? Let's go to 15 minute. So like, now we're on the 15 minute. You can see that I'll probably just take that up a touch. You can see how we respect, you know, price action from, to go right the way down here. Yeah, so that's a pretty clear trend, isn't it? You know what I mean? You can see we started it here, and then we obviously blasted up, and then moving along, we starting to respect, you know, the areas here. Now, zooming out, the reason I would never, let's just say, I would never just put a buy order at any of these, and I would never put a sell order at any of these, and it's because of just these little areas. The problem is, more often than not, you get kidded into thinking that it's a good idea to short, but oftentimes this whole idea of keeping you in the game to, you know, think you're winning markets because each time it hits these points, you go, well, it's hit it once, it's hit it twice, therefore it's, you know, there's a good reason it will be out. Your stop losses are always going to be just slightly above, or if you're more risky, your liquidation levels. So the way I approach this is, I'm happy to not take a trade if it doesn't come in. What I like to do is actually pick the zone. So I will, you know, draw my zone up here, and then I'll kind of, you know, do that. Now, don't worry right now. That's what we'll call sell side liquidity, right? But for now, this whole zone here is where I'm interested in putting a short in, right? Not going long, right? So I'm going to reverse because, like I said before, I'm a reversal trader, and anything like where I think there's a potential for the reversal, I'll scale that entry. So that means, for me, let's say I want $100 worth of a trade. My entry level will scale from here to here. It's not just this area, by the way. There's reasons which I won't bore you with now, but I'll use something like Excel charts to figure out the best entry point when the price comes down, because you've got to remember, right, the whole point of the reversal trading is that when you see price come down and break this key level of support, what it normally means is there'll be a load of liquidity, and that liquidity is normally stop losses, right? Or it will be, think of it like this. Well, let's just take a quick step back. Why is it important for liquidity? Why is it important for bigger players to find the areas of liquidity? Does anyone want to maybe just give a couple of reasons why you think, if I'm trading orders of millions of Bitcoin, right, why would I want to try to trade in an area of liquidity versus an area of low liquidity? I realize if you're watching this watching this after it's live, it's because I'm asking someone in the audience. Anyway, have a little think. Why would someone who's trading a lot of Bitcoin want to try to buy in an area where there's a lot of liquidity? Think of it like this, right? Think of all the liquidity that's being traded along up and down this area here, right? Now, I want to trade $10 million worth of Bitcoin, right, as an example. If there's, I can demonstrate this in Bookmap actually, right? Let me just demonstrate this really quickly. You can't see it on there. My apologies. Let me just change that back. I think it'll be an important thing to show you, right? Just bear with me 1 second, guys, because you'll understand what I'm saying when I'm showing you this. Right. Okay, hopefully you can see that. This is Bookmap, right? So what this is going to show us is liquidity, okay? Now, when you're looking at liquidity, what you're actually seeing in a chart is how much passive orders is currently sitting in the order book. Like, let me give you an example. Like right now, if you look at the area here, so 23,600, that's Bitcoin's price. We have 326 limit orders. You can see here, that's a limit order that's currently sitting waiting to get filled. And then to the buy side, which is the green side on the right hand side, these are all buy orders, passive limit orders sitting in the order book waiting to get filled. And the reason that's key is, if I try and trade 5,000 Bitcoin at this price, well, there's not enough liquidity. You can see that. You know, you have like 178 here, 159, 201, 238. That means if I do a market order for 5,000 Bitcoin at this price, the slippage and the price impact might mean that actually I'm not paying 23,550 for my Bitcoin. I'm actually paying 24,300 or whatever summation of that liquidity at those levels it takes to fill them orders. So it's not good. So what you therefore have to rationalize is that when I'm, for bigger players, for whales and bigger players who want to trade at those kind of levels, and there's, you know, what happens, it happens all the time. They need to trap traders. They need to trap liquidity in big pockets of the chart at a specific price. And how do they trap them? Well, think about it, right? Down in this area here, right, you're gonna have a lot of stop losses. What's the opposite to a buy? What's the opposite to a buy order for a stop loss? It's a sell, right? So it's selling Bitcoin. What's the opposite to a buy side liquidation level? It's a buy. So the exchange, if I get liquidated, let's say I've got 10k or 5k or whatever, and I get liquidated, well, that gets liquidated as a long order if I'm shorting, and if I'm shorting, it will get liquidated as a long order or a short order. You know, it's a vice versa. So the reason you sometimes hear this term stop hunt, or like this idea of going to chase where the stops are, that's because bigger players will want to try to grab liquidity at cheaper rates, and the easiest way to do that is to find where all the stop losses are. So the patterns, these ideas of these kind of man-made patterns of where, you know, we see support and resistance, is nothing more than an idea to make you believe that you're getting good entries as longs and shorts when it hits the point, but actually more often than not you're going to get these slippages where price actually goes right the way through that level, and that's because, you know, they want to get stops. You know, go back to the initial point which we were looking at here when we looked at these data points. you know, you can see this is a nice range where we're seeing, you know, these touch points, but and then another touch point confirms it's a trend, but then you get this big ugly push to the upside, but it doesn't go anywhere. In fact, it goes back into the range. Same again, lots of these little wicks that stop everyone out, back down to the range. So that's just something you've got to keep in mind. You know, when you range trending and you're in a trend, don't focus so much, in my humble opinion anyway, don't focus so much on the level that you get your data points from. Data points meaning the more touch points, you know, it's line of best fit. It hasn't got to be absolutely perfect, but, you know, classic one here as well. Broke out of the range, only to come back in. You know, when you're focusing on drawing support and resistance, I have to show you that because it's the next step in terms of what you want to look at as a trader to learn. But there's nothing really to it, honestly. There's nothing magic. It's just, you know, looking to the trained eye at, you know, these levels and touch points. Like, you might say, well, why didn't you do your trend line like that? Well, it's not really a line of best fit. What you want to do is try to get as many touch points as you can, and then figure out which ones of them are the liquidity grabs. And that's the liquidity grab, because you can see here, you know, we have a nice touch point here, we have a nice touch point here, we have a nice touch point here. So me, in that position, I would have a nice buy side liquidity zone, right? Like that. And that for me is a buy zone. Sorry, that's a sell zone. What am I on about? My bad. Sorry guys. Let me change that, because I don't want to ruin the. There we go. Template. That's sell side. This is buy side. That should have been green. That's gonna fox us. Right. That's buy side liquidity. So we're essentially gonna buy or long, and we're gonna short when we come up here. Okay. That's the idea. Now, for me personally, you think about the logic of it. You're trading like the market makers and the liquidity providers and the bigger players when you trade like that, because chances are you may, you know, if let's say I don't want to really sit looking at the charts every 2 seconds of the day. All I'm interested in, actually, you know, this is an hour chart. So let's just zoom in here. You know, this was an hour. So these two candles were an hour. So if I set myself a little trigger alert here, you know, what I'm looking for is weakening of the buy side. So when buyers are starting to weaken, and they still went up because the sell side, or the red candle here, still went past the next candle up. So there was a little bit of trickery in there. But I'm looking at that as okay, now I'm interested in getting a short in. I'm not interested in shorting at this point, because this will have wiped out a lot of the traders, you know, with the stop losses and the liquidity lines, the liquidation levels. Same here, even though it's a little bit smaller. So I'm going to scale my entry from this point to this point. You know, that I want to give myself plenty of room, maybe 100 points, 100 basis points, because think of it, here's the other thing, right? There's a very deterministic sum that you can do for the 100x leverage, and it's around 80 basis points, something like that, maybe 86 basis points, which is to say, if I do a 100x leverage at a specific price, if I think this is the golden line where I think a lot of reversals are going to come, well then my liquidation level will be 80 points above here. Well, that's 200 and let's just look at 80 basis points just so you give you an idea of what that looks like. You know, if we got in here, there's 80 basis points there, okay? This little tiny farting blue line here, that's about 80 base. Well, that's 82 actually, so let's just reduce that. That's 86. That's what we want. That's 100x leverage there. So that means if you get an entry at this level here, that's your liquidation. So you're gonna get liquidated with 100 basis points. So that's not a smart move, is it? To be, you know, reverse trading at that line, specifically if you're greedy. Now, if you're 10x, you've got plenty of room. You've got lots of wiggle room, and that's not a problem. So, anything else I would share in terms of support and resistance? I'm just a bit mindful of not going too much into, at this stage, diving into the more complex stuff about like order blocks. It's I think we just need to gauge. I mean, even this, you know, looking at zones, it probably wasn't really what we were wanting to dive into at this stage. But you know, support and resistance is nothing more than looking at areas in the chart where we have a lot of touch points, and you know, just using your own ideas and analysis to derive data points that match up. You know what I mean? It's not that complex. And oftentimes support can become resistance can become support. You know, you can see it here. You know, we've broken through the support here. This is on the hour time frame, and then it starts to bounce off it. So it bounced here, comes back down, bounces, comes back down, bounces off, goes up, and along here then starts acting as a support level here. So support can become resistance can become support. I mean, one of the best kind of trading plans that a lot of people will do is they'll do what's called, you know, if you're a breakout trader, they wait for the retest, and that's where, let's say we've been trading within a range for some time, and let's see, does it do it here? Yeah. So take this here. This would be the retest. So we've come through. I'm just going to zoom into this. You know, we've broke through with these 3-4 bullish candles. Nice high volume, gives you the indication that the move is legitimate. Breaks through, comes back down, retests to the absolute dollar accuracy. You can see the wick literally touches the support line there, and then we go off to the moon. You don't touch the next level of support. So how does that fare if we start overlaying some of the ideas that we've done in previous sessions then? I mean, look, by the way, we can get as granular as you want. I mean, look, you can to the trained eye, you can say that there's a support line here. You've got 1, 2, 3, 4, and eventually what you start to do, by the way, I do anyway, and probably others do, is you don't draw lines on these charts anymore, because you just start to see where the trend is, and you don't need to be because you don't want to have a chart that just goes too crazy. So I'm still, yeah, sorry, yeah. Thanks for the update, guys. Sorry, my complete bad. Trading view. Not trading view. I want to go Excel charts. Sorry. Yeah, you didn't miss much. Sorry. What I was saying here is, in terms of becoming support and resistance, sorry, guys, thanks for that. As you can see, you know, if I zoom into this zone here, one of the biggest kind of ideas that a lot of breakout traders will have is this, which was the one that we saw, kind of, you know, retest. So you can see this has been a, let me go back to the other one. It is a classic one. So if I look at here, you know, we've acted as like a support, where I know you can see this wick. It's not an ideal wick, to be fair, but you can see where price is broken through. We've come back down, we've retested, and then we've gone back up and shot right up, you know, up to this point here. So, which has acted as a support, sorry, a resistance in the past. Once it breaks through, and you normally find when it does break through, it breaks through with high volume, and you know, a kind of a big spread of the candle as well. The body itself normally signifies that it is a breakout, but then, you know, it's short-lived, takes a load of liquidity, and then comes back down. But what I wanted to kind of overlay on this is, you know, this idea of building up ideas where we can say, well, actually, you know, taking the fact that we drew some, let's go out to the 4-hour zone, actually, right? So we've built some kind of support and resistance ideas in terms of, you know, just putting things to the eye. How does it look when you start overlaying? Let's put our volume zones, right? So, I mean, it should come to no surprise, actually, that this volume zone here is right at the same line, or right in the middle of pretty much where we've got, you know, our support and resistance line here. And then again, you know, you can see this is where you can start using Confluence to bring in multiple ideas. So let's take the most recent price action. Let's go into here. Okay, so I'll go the 15-minute. So you can see this is a volume zone. This is taken again from that fixed volume profile from the entire BTC price. We've been trading, let's just say consolidating, yeah. And the longer you consolidate within an area, especially if volume starting to drop, the kind of more crazy the move gets. What happens if we start to add in, we got any monthly? Yeah, we have. So we've got a couple of monthly high term time frames. So you may say to yourself, well, actually, if I was going to look for a liquidity grab, right? This is just my mind. I wouldn't focus on this monthly here. Number one, we've already broke through it. Number two, this is that major support line that's been acting from, you know, as far back as we saw. But we've also got this range. So there's fixed volume range, but we've got another monthly down here, a key high term time frame. So this would be a very favorite for me personally. This would be a favorable area that I that I would look to take along from. Nice tight stop loss. You know, make sure you caution with your risk management. But this is the kind of thing what you want to do. So building ideas. So you've got resistance lines which you built, support lines rather. We've got monthly key high term time frames. Do we have anything on the weekly? Weekly is just above us at this moment in time. What about daily? Oh God, we have a lot of dailies because they happen every day, most days actually. But if you look, we've got a daily here, probably, and a monthly on that same line. So that's going to be a really, really strong zone and area to break through, and that's 23,129. So I would be looking at things like that for me. That kind of how I approach these things. The other thing we've not really touched upon, I think, is something that I do a lot in terms of just liquidity, right? So you always have to remember with these kind of things, it's almost like, when we hit a certain point, we reverse, right? So what I like to do is again, I normally put my magnet tool on for this, is I just map out where liquidity is going to be. And again, why is it, just to indulge me, why would this area here be, why would I call that liquidity, right? Why would I call this liquidity? And Kick, if you're in the audience, you can't respond to this because it's cheating otherwise. And this liquidity, and each one of these, by the way, will be different levels of liquidity, yeah, because unless you're using sophisticated tools like high block and or maybe my friend's indicator, then it's difficult to know exactly where the biggest levels of liquidity are. But this is where you start to zoom out, right? But ultimately, I always like to think, whenever I'm trading, right, there's the really technical version, people will say, and oftentimes it can be abstract if you're not doing this all the time. What I like to kind of do is just take a step back and think logically, like thinking about, like, forgetting about some of the fancy terms you're in, like buy side liquidity, sell side liquidity, smart money. There's a lot of these kind of terms that I think, if you're new to trading, and this is geared towards new traders, this, by the way, so I'm not trying to make anyone feel off, but a lot of these kind of terms you earn will catch you out and you don't really know what it means. But I always like to think logically, and I always have this kind of mental thing in my head about the different types of traders. There's the institutions, right, the guys who need to move a lot of money, and a lot of this is kind of linked to other markets like currencies and things like that. But if you think of it, a lot of money, when it gets exchanged, like I said before, we don't think of it in this way because it's never a problem for us, because we're not moving a lot of Bitcoin. If anything, we're trading very small amounts of Bitcoin. But then as you start moving up the scale of richness and institutions and stuff like that, these are, there's a lot of Bitcoin being exchanged. So it's always about trying to get the best price, and liquidity, the way I think of it, and this is open to debate, of course, but the way I think about it is purely, why do big players like to find the areas of liquidity, or why does people like to trap people for liquidity? It's because it's, again, price impact. I mean, a lot of us who trade on MDB, as an example, in the earlier phases, think of it. Does anyone remember when we done with MDB, when we had the Phoenix buys and the price would just go up? We'd do a 20k buy and the price would like 2x, or something stupid like that. Well, that's price impact. That's, well, not so much as on a DeFi project, but where we've got an order book with a lot of orders, like a book map. I was showing book map before. Again, it's about liquidity, and if you've got low liquidity, big price moves. If you've got lots of liquidity, very small price moves. So if I'm a big player trying to move money and I want to buy and sell, I want to do it where I know liquidity is going to be high, therefore the price impact is going to be low. That's really what I'm about. So that's why I want to trade. So it's like, if I want to get out of a trade, let's say I've been holding a trade here and I've got a nice short and I want to take big profit here. Well, this is where I want to try to drive price to, because this is the area where I know there's probably going to be an exchange of liquidity, because again, it's the point at which we reversed. That means there's going to be stop losses. That means the counter side to that is you're going to get your breakout trader who thinks price is going to go to the moon, apes in, lots of liquidity gets added in, perfect, price reverses. Why does price reverse? Big player sells, huge moves to the downside, and then the trend continues. So I always like to look at the points on the chart where I can say, okay, well, I think there's probably going to be some level of liquidity here. What is that? Liquidity. And then what I like to do is, zoom out, go to the 4 hour, sense check what you've put. You know what I mean? So this is what we would call an equal high. So, this, or double top, call it what you want in that sense, but you've got these two points here. What does that tell you? That's significant, isn't it? There's significant in the sense that price has tried to come up to here twice, 25,296, and hasn't been able to break through. So that means big players absorbing liquidity to the absolute dollar accuracy that it couldn't come any higher. So what we need to take away from this is liquidity is important. There's an importance to the amount of liquidity at these levels, and we as retail traders can also use that to our advantage, because I say this many times, but the attrition rate of players coming into the market, new players, is massively high, and the churn of people who come in don't really understand the concept, just looking for the kind of I'll buy low and sell high kind of idea at these support and resistance lines, which I think is still important to understand, should not be your trading strategy, but instead be looking at these as a way to think, okay, well, these are the traps. These are where people are essentially going to want to, at some point, maybe not now, maybe not today, maybe not tomorrow, but at some point we'll come and collect, and they'll come and blast past that, and then, price will reverse. So that's it really. So these are just support and resistance. Nothing too clever. As I say, the way I like to approach it is just multiple data points. Not try to do your line of best fit. What looks the most likely in terms of your line of best fit. When you get these outliers, just think of them as liquidity grabs. Yeah, so these are the points at which market makers or institutions have pushed price up, get a load of stop losses, grab that liquidity, make some sells, price reverses back down, so on and so forth. Just that's pretty much it. It's not rocket science at this stage. So I think that's it. Anything from you, my good friend Big T? Kich, anything to add? Anything I've not addressed? I'm just cautious not to go into too much detail about ICT concepts, which I think are massively important, by the way. I think if you get that right and you understand, even if you don't follow it to the letter, with fair value gaps and all these things, it's just, for me, it's about the understanding of how the market works. The manipulation side of it is massively key, and I think just having that understanding behind, like trying to see what happens behind that candle is really powerful. I mean, eventually what we'll do is we'll do a full session on Bookmap. We'll do a full session on Exo charts, which I think is a very powerful tool, which is really about candle by candle footprints. So it's, seeing what you see on Bookmap, right? Just very quickly, and this is just a flavor of what we're bringing a bit further down the line. But when you're looking at Bookmap, what you're actually looking at there is what's going on in real time on an order book, but it's at an order book level. If you're looking at like Exo charts as an example, just very quickly, if you're looking at this, I mean, this is going to probably, you look at this and go, what the bloody hell am I looking at? And you would be absolutely forgiven for that. But this shows you at a candle by candle level. Let me just make it a little less, try to make it a little bit easier on the eye. Bid ask. So this is just showing you candle by candle. Like this candle just opened now, right? So it's showing you, you know, what's happening on the buy side versus what's happening on the sell side. So how many BTC sells have gone in, and these are all pure market orders versus, you know, what's being sold, and these are, you know, think of it as bid and ask on an order book. So on an order book, if you see on something like here, you can see, sorry to flicking around here by the way guys, but you can see on a typical order book, you can see you know, bid and ask. So what are people willing to pay and what are people willing to sell at in terms of the order book. So you'll see this constantly moving up and down based upon limit orders. So, you know, passive orders that go in the market waiting for it to be sold or bought. But what this shows you, sorry, I'm platform mad. What this shows you is a candle by candle view, and I'll show you why it's really powerful. I go for like delta ladder, right? You can see this is the candle. You can see here there's been no buy side liquidity up here, and this is what I would call typically a bit of an imbalance because no one's took up the bid. But you can see on the buy side, and it's why we've had a straight up candle, there's been no sellers, no one willing to take those buys, so, or no one's selling, so everyone is just buying at this moment in time, and you can see all these zeros here. So at some point we'll probably come back and fill that gap. But this is a really, really, really powerful tool. And when I was saying before, by the way, now I'm starting to use this a little bit more, is when we break out of a zone and we go into an area where we're in that kind of buy side liquidity or sell side liquidity, which is, you know, like I said before, like these zones. Get rid of the magnet quick. So let's say that's my area of interest. You know, that's a tick in the box for me. This is the point at which I'm interested in shorting. But I want to know when we start to see the buyers wane. Well, this is what I do, is by going into here, I can see when we start to see imbalances to the top of the chart on a candle. Usually what that means is the buyers start to exhaust, and it's a nice way to say it. Even if it's a market short, I can market short at that point, but still relatively good stop loss. But I think this is probably well too advanced at this stage just to kind of go over that stuff. Is there any questions from anyone, guys? Well, let me just ask this one question. Have I done a good job at just explaining support and resistance, just purely in terms of, you know, you're just trying to find the levels where price respects, whether it's resistance or if it's support? T, if you get this, mate, I'm really, really pleased. I feel like I've ticked the box here. So just as a very final recap, guys, all we've done, right, is just zooming out a little bit. We've, you know, mapped out some key levels in terms of support and resistance. We've identified where potential areas of liquidity would lie based purely upon, you know, the spikes in the chart. We've previously then also been able to bring our monthlies, our weeklies, and our daily high-term time frames when you're looking for interesting areas. And then finally, we also added our volume zones. So what I'm going to do, I'll just take the liquidity off, I think. Yeah, that's for a separate session. That one on that one. I'm going to go with that. And what we're going to do is each week we're going to keep building on this chart, right? This idea of the chart being, you know, built up, and to see how we respect these in real time. So we know we can take a snapshot from where we were from last week, and again, as we build on it, it's kind of like we're learning together, let's just say. I'm gonna get rid of that. I don't think that's required. What's that? Yeah, we'll leave that on. Again, just keeping things nice and tidy. There we go. go there, bring it in there, right click, and we'll just call this S and R. Nice. Cool. Okay, well, let's call this one a day. 50 minutes, not bad, not too bad. Appreciate everyone that's came along. Any questions, you know where to find me, guys. Take it easy, and I will see you guys later.